what were my biggest challenges and why I switched to end of day trading. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and I received a question a couple days ago basically asking me what my biggest challenges were with the intraday trading and why I switched to end of day. So I went over that in one of the other videos, and but some of the biggest challenges that I had that I really found were potentially detrimental to long-term consistency were just being able to be consistent. And I had a couple of really basic high probability setups that worked very well, but I found that the screen time involved on the hourly charts, as I mentioned, I primarily looked at Asia Close and London Open, and sometimes that would spill over and set up into the US Open. So you could end up spending 4 or 5 hours sort of back and forth checking the screen. And I found that once you're in a trade and you're psychologically vested into that particular trade, you lose sight of other markets. So for me, I found that most of my errors, as I said, occurred on intraday trading, on the not so much in the last couple of years, but previous, but still there is to some degree when you're on the live charts. The markets can move around in the last few minutes at the close of the hour and create a bit of analysis paralysis. And I struggled a bit to feel entirely comfortable. I think that there's a lot to be said for the end of day markets. If you learn to study the bar charts or candlesticks Monday to Friday, you can almost learn the range and the candle patterns that will set up to identify the highest possibility days to trade, even on the hourly charts. But I found that I have worked at some similar patterns on the end of day. I've coded them into Metastock. I can run those scans, and then it allows me to go to those charts specifically manually. I'll still run through 10 or 11 of those charts manually myself anyways, but then when these other scans that I put through come up, I can go to those charts and manually go through them to see if they fit the criteria in the filter for me to put an order into the market. So I think to simplify it, end of day trading removes some of the anxiety associated with making a decision immediately. There are some days on the hourly charts where there's still a couple of simple patterns that when they show up, I will pay particular close attention to those markets. But again, the bulk of my trading has come from end of day, and I do inherently see that most markets will give almost a trade every single week that's a very high possibility setup. So at least 3 trades a month that are clean on each currency pair. So for me, again, I think my long-term goals was to step back and be able to, manage 4 or 5 trades at a time comfortably on end of day and allow them to really pursue those larger range expansions that occur when markets break out of, rectangles or other geometric patterns on the chart. So that's just what I felt was best for my psyche and my overall objectives. I think that the markets, when they do move on the longer time frames and it involves multiple time frame traders, that those markets are more likely to carry through and have a sustained amount of momentum. Whereas on the hourly charts, most likely, unless they're part of a larger time frame move, you could end up running into some other roadblocks. And again, the time involved, you may need to stay longer on the charts. For me in Perth, the US session goes into midnight to the London close. So, again, it's about lifestyle, and I think my overall objectives are to be off the screen and still hopefully be able to not only be profitable, but even more so in a bigger scale because of those larger potential moves where I don't have to be at the screen making decisions. I can assess it in the morning when New York close happens and then go from there. So great question. It's not for everybody, but I also, just one last point, if you haven't watched Anton Kreil's video, I'll put the link below. If you really learn and understand how the market is set up and structured and a lot of the misinformation that's out there, it's like Donald Trump's fake news, the fake forex trading site, there's an inversion narrative, as he calls it, that perpetuate a lot of garbage, a lot of losing trading strategies, because they're constantly in pursuit of new clients to bring money into the market. And essentially it's almost like a massive pyramid scheme that filters back to Wall Street. So I think the longer the time frames, the more likely you're going to be positioned with the smart money, and smart money needs dumb money to keep the game going. So I'm trying to stay on the side of the smart money. So hopefully you got some value out of that, traders. If you're not looking at end of day, I would really encourage you to look for similar trade setups that you're taking on your shorter time frames on the end of day. And I think the odds are more heavily weighted for retail traders on the end of day trading markets. So stay disciplined, stay focused, follow the smart money, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.